So my name is Philippe Botteri. I'm with Accel partner based in London, and I'm going to talk to you about the 5 mantras of e-commerce in Turkey. So just maybe as a start, I will just tell you a bit of my background. So which led me, started in Europe, then with McKinsey. That helped me to transfer to the Silicon Valley, where I spent the past 10 years. With McKinsey and with Bessemer Venture Partners, where I focused on investments in internet and software companies. So you see here a few of my investments in internet, so Bizo, Criteo in retargeting, and Cornerstone and Eloqua, which are both SaaS companies now quoted on the NASDAQ. And I joined Accel Partners about 18 months ago. I saw the opportunity to invest in Europe. I saw Silicon Valley getting more and more competitive. And I really wanted to be back here and invest in European companies. So since in the past 18 months, I've invested in 3 companies: Shopmium, which is a mobile couponing company; DocuSign, which is an electronic signature company. And they're showing astonishing numbers. So they have more than 20 million people who have signed and more than 200 million documents signed. And last, BlaBlaCar, which is a funny name, so people like it or don't like it, but at least you will remember it, which is a ride-sharing network. They have around a bit more than 2 million members now, and every month they are carrying the equivalent of 1,000 high-speed train. So they're really talking volume now. Just a few words on Accel. We are a truly global firm, so for us it's not Turkey versus Brazil. For us, it's Turkey and Brazil. We think there are very exciting opportunities, in both countries, and we cover all the continents. We've been around for 30 years. We are stage agnostic, so we would invest anything from a very early stage investment of a few $100,000 up to growth equity check north of $50 million. And we are value-added investors, so we tend to take a board seat in the company we invest in and try to help companies the best we can, in particular helping them go international. So the key trends we're investing in, just to give you a sense of our areas of focus. So we are big believers in big data and cloud computing with companies like Dropbox and ClickTech and Cloudera. We're very active in gaming, so we talked earlier today about Angry Birds. We're also investors in companies like MindCandy or Playfish. Obviously, we're a big believer in mobile with mobile apps. So I mentioned Shopmium. We're also in Alo, Hotel Tonight, and Lookout. Social. Everybody knows, of course, about the names here on the slide, and we're very proud of them. And then next generation e-commerce with companies like Wonga or Etsy. And finally, of course, emerging markets. So we have offices in China and India. I've been very active there. We also have investments in Russia that we cover from London. And Turkey is, hopefully the next country that we're going to target. So why do we like Turkey? You're all very bullish about Turkey. Otherwise, Turkish internet. Otherwise, you wouldn't be here. So you probably all know what's on this slide, but Turkey, obviously there's very strong macro trend when you look at the growth of your GDP. You have an excellent infrastructure with strong internet penetration, very strong mobile penetration, and of course very strong online payment infrastructure and credit cards. And the demographic is very attractive, with most of the people being very young and very active with new technology. So Turkey is really a big bet for our firm. We are spending a lot of time here. We've been here for about a couple of years now, and during these 2 years we have looked at tens and dozens of e-commerce companies. And what I wanted to do today is share with you, some of the things we have learned about e-commerce in Turkey. And hopefully we'll have a few minutes at the end if you have questions. So we tried to find a catchy title. So we already heard about the golden rule, the law. So we found to took some Middle Eastern with touch with mantras. So our first law is, me too is not enough. So I remember the first time I was in Turkey several months back, and I met with a Turkish entrepreneur. He told me, one of the problems in Turkey is that if you have a very successful restaurant opening in one street, then you can be sure that a week after you're going to have the same restaurants opening on the same street right in front of it. And unfortunately, this behavior is something that we're seeing on internet. I mean, the numbers here are very interesting. We see the number of clones that have been created around Groupon is more than 150. If you look at the number of clones for private shopping club, it's north of 70. I mean, there is no room for 70 private shopping club in Turkey. Typically in European markets, you have 1, 2, potentially 3 e-shopping clubs that manage to be successful, but you don't have 10, and clearly you don't have 70. So one of the points I wanted to highlight here is when you think about starting your e-commerce company or expanding your e-commerce company, you really need to focus on differentiation, which can come from product, it can come from segment, it can come from channel, but doing what the next guy already did and being the 25th company doing the same is not going to be very helpful. And so the consequence of that, is what we see in e-commerce is that the gross margin of the business are typically half of what we see in other countries. And are, I would say, much closer to China than they are to Western Europe. And I do believe that the margin really reflects the competitivity in the market because you can buy, the price at which you buy is relatively the same for everyone. If you're bigger, you're going to get economies of scale. But at the end of the day, the same price, so you compete, same cost, so you compete on price, and then the product margin you're making is small. So differentiation is really key in this market. The second mantra is really about cash consumption. E-commerce is not a cheap journey. So you can't build an e-commerce company raising $1 or $2 million and saying, well, that's enough. I'm going to build a very big business. If you look at all the businesses in other geographies, including Russia, that have been very successful, they have raised north of $45 to $50 million. With Guild being north of $170 million. So, these companies are very well, big brands, very well known, very successful. They made money for the investors. They have been excellent, best in class in their categories, and still they're consuming a lot of cash. And so why are they consuming a lot of cash? There are 2 reasons here that I've highlighted. One of them is that building inventory is very costly. You need to pay for the goods before you sell them, which requires a lot of capital. So when you look at your EBITDA line, you may not see that you're burning the cash, but when you really look at the cash now, it's immobilized in. Then the next thing is you need to build all your infrastructure. For Copy VIP in Russia, they've built all their logistics because there was no delivery. So you're fortunate in Turkey, you have delivery, but you still. Great delivery services you can use, but you still need to build your warehouse, build all your automation system, and that requires very, very high investments. The second thing is marketing cost. Marketing cost is where you're going to spend a lot of your money, and I think one of the common, one of the challenge in marketing is really to understand how do you use your marketing dollars, and in particular, don't think your marketing dollars are only going for your first baskets. Typically you need to pay for the second basket, you need to pay for the third baskets. E-commerce, maybe, obviously you build lifetime value of a user, but you really need to understand how much you're paying to get your user back. And it's only after, maybe the 5th or 6th when your brand is strong enough that this customer is going to come for free. But don't assume that the second basket is going to be free. So you need to prepare for this journey and be very careful about how you use every single dollar of cash in the company because that's going to be your most important resource. And that leads me to our third law, third mantra for e-commerce in Turkey, which is you need to run your business with numbers. I mean, e-commerce is all about numbers, and it's all about doing 100 things, 100 small things right. And the only way to know that you're doing them right is by looking at, at the number, by measuring everything. So here I've highlighted some of these numbers that I've put in 3 buckets. The first one is customer metrics. You're all familiar about them. So it's customer acquisition costs. But as I said, you need to look at it by channel, but you also need to look at it on the first basket, second basket. And what's important here is you need to set up the right BI system to be able to measure it, because a lot of the companies where you ask them, well, what is the cost for a repeat basket? And the answer is, well, we don't know, because it's very hard to tell because we don't have the proper tools in place. So what we do is we allocate all the costs to the first basket, and we count all the marketing dollars, so it should be the same. Well, guess what? No, it's actually not the same. So you need to make sure that you build in place the right technology to have the accuracy that you need for these metrics. So of course, CLTV, so customer lifetime value, is very important, which is looking at all the profit you make from a customer over its lifetime, less the cost. You also need to look, the second bucket is a website metric. So what is your CPC? Look at it by channel. What is your Google quality score, which is very important? What is your conversion rate on the website, the ratio of visitors to buyers? Where do you get your traffic from? How is the mix of resource of the channel mix evolving over time? These are, there are a lot of numbers, but you really need to be on top of them. And then the last bucket, it's financial metrics. And what I would say here is that just don't focus on your P&L. Cash is very important. Look at your working capital. Look at your inventory. Look at what drives the cost of your inventory, in particular inventory write-off. Because it's very easy to buy inventory and then say, well, I'm still going to sell it over time. But there is a point where you can't sell it. You need to write it off, or you need to sell it at a very low cost, sometimes below the price you paid. So that's really critical. So then the fourth law is how do you make the business efficient? To make a business, an e-commerce business efficient and profitable, at some point you need to build your brand. And the way you build your brand is by providing an excellent customer experience. So why is brand so important? Because brand is part of this virtual cycle that you're trying to create. Because the stronger your brand, the more organic and free traffic you're going to have. So the more free traffic, the less you're going to spend to acquire a customer on a blended basis. Then, obviously, the lower you pay your customer, the more profit you're going to make, and you're going to be able to reinvest that profit into getting more volume, and this volume is going to build your brand. So you need to get into this virtual cycle. So what it means is at the beginning, you don't have a brand, so you need to invest a lot in marketing, but hopefully, with time, this pay off. But for this to pay off, you need to make sure that you're providing an outstanding customer experience, because you can pay to get volume, but if the experience is bad, then you're never, you're going to build, negative brand, and what you want to do is really building a positive brand. And the way to characterize this customer experience is about product. So make sure that you have, the right choice of product, that you have the best-in-class UI, so that people can really flow through your website, discover things, and buy them easily. And I think for me, the best way to measure that is really to look at your conversion rate. And obviously, the better your website and your experience, the higher your conversion rate is going to be. And that's the beauty about e-commerce, is that at the end of the day, everything you're trying to do is measured, and you can see how you progress along these lines. The next thing is service. Obviously, fast delivery is very important, but customer support is also very important. If you get the wrong item, you need to get the right one very quickly. If the item is out of stock, you need either to be refunded very quickly or have someone propose you something alternate that's going to make you happy. So all this is critical. And then, obviously, payment. You need to offer the variety of payments and make sure that everyone wanting to pay on your website can do it very easily, and that, obviously, you can limit fraud. So that's the fourth mantra. And then the fifth one is around mobile. I mean, we talked a lot about mobile today, and mobile is actually something very important. I just wanted to give you some of the examples from our portfolio just to give you how relevant mobile is becoming now. So if you look at BlaBlaCar, they get 15% of their book from their mobile app. And that's just an iPhone and an Android app, but they don't have a tablet app at this point. And still, it's 15% of the booking. And they get even more people posting rides on their on the mobile app because it's up to 20%. In the US, one of our portfolio company, for the last winter holiday seasons, saw 40% of its traffic coming from tablet. 40%. That is an incredible number. And the last example, one of our e-commerce company in Europe is already, just a few months after launching its mobile app, is seeing more than 20% of the revenue coming from it. So mobile is really becoming something big and something that you can't ignore. And I would encourage you right from the start to think about your mobile strategy and invest in R&D in building mobile application. Some of the numbers you see here for Turkey, because you may say, yes, but smartphone penetration in Turkey is still small, so it doesn't matter that much. I mean, I would disagree. Mobile penetration in Turkey is pretty high with over 92%. Obviously, that's not smartphone, so smartphone is more, it's hard to say exactly, but I would say 25%, but these numbers are growing very fast. Plus, in this 25%, you have the people, a much higher share of people who are online, that do have smartphones. And therefore, I think this, if you look at the internet population that you're targeting being an e-commerce business, then it's probably more than this 25%. So don't ignore mobile. Don't think that it's not relevant today, because I think it is. So that's it for the 5 mantras. I see I'm running out of time, so just summarizing them very quickly. So Me Too is not enough. E-commerce is not a cheap journey, so be prepared. Run your business with numbers. Build your brand by focusing on outstanding user experience, and mobile will be bigger than you think. So thank you. If you're interested, these slides will be available on my blog and on the Accel website. And I don't know if we have time, but happy to take a couple of questions.
Actually, yeah. Thank you.